Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Monday, March 17, 2025. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Well, we have a lot of stuff to go over, so let's do that and go over it. We were looking for a low. We got the low. Let's put that behind us. The low came in pretty much on the day we talked about for days and days and days. And we'll issue that a funny how that works. Now what we have is called follow through. We do have one interesting tidbit where we have a shenanigans tail candle. This is Friday's candle, and Friday was never down here at our trend line that nobody else knows about. And as you know, and as you can see, the market sold off to the time, right? Time is more important than price, to the time frame we talked about, and it stopped at a trend line nobody else knew about. Let me ask you a question. Who else gave you that? Just curious. I'll wait for the answer. Now, this shenanigans tail candle may come back to be revisited, but it is ironic. It is interesting how it came right to the trend line, and here we are, many points higher with follow through. Now, what I told traders in the live room inside the numbers, I told them when this market bottoms, you're going to be up 150, 200 handles before you can say the word. Here we are, the trend line, let's just call this 550 for argument's sake. The low was officially 549.68. We'll call it 550. Today's high, the market's still operating as I'm making this video. I have somewhere to go, but it's not going to change anything what we're doing here in the big picture. And the high today, we'll round it up to 570. What is that? 200 S&P handles. Once again, who gives you this information? I want to know. I'll wait for the answer. Tick, tick. Is this a bona fide market bottom where we're looking for new highs? No, that's not what we're saying. The whole time I've been saying we're looking for a low. Maybe we get a 50% retracement. Maybe we get a 618 retracement. Maybe we get more. Maybe we get less. Let's just take a look at the possibilities. Here's a rough draft using some fibs. 382 coming up at 574. 50% coming up at 581. Maybe they hit one. Maybe they hit both. Maybe they go higher. We don't know, and we don't need to guess. Right now they're headed for a gap that coincides roughly with the 200 period moving average. That would be right in this zone right here. We'll see what happens on tomorrow, on Tuesday. Obviously, you can get a turnaround Tuesday. Now let's talk about what can happen, what has happened in the past, what generally does happen for a moment. So in the reality of things, the market is designed to make as many people look like fools as much of the time as possible. We all know that. And if you don't know that, write that down, put it on a sticky note. So therefore, that being said, we should not rule out a shakeout operation. Whether it's on turnaround Tuesday, tomorrow, or another day, we really don't know. But don't be surprised when you see the market turn around for some unknown reason. And it's not really an unknown reason. It's the way the market works. Just like everything was driven on the downdraft like this. Everything was tariff, this, that, and the other thing. Yet in November, and those of you that remember will remember, in November in the MSF Masterclass, I taught traders how to forecast the market. And we were looking for a February, March low. When February came, I said it could be a March low. Here's the date we're looking at. We targeted last Friday, and guess what happened? The market turned last Friday. And again, once again, just for the heck of it, it's a funny how that works. But what we also have to have the awareness of is the market will try and shake out the Johnny-come-latelys. Who were the Johnny-come-latelys? The one that think they're missing the bottom, the one that have to chase the market. Those folks will be the last ones in, and they will be the first ones out on the shakeout operation. Now, does the shakeout operation have to test the lows? Not necessarily. Can it test the lows? Anything is possible. The reason I brought up the tariff thing is because If we were talking 4 or 5 months ago about a low coming in this time frame, how could it be because of the tariffs? It couldn't. It's a convenient news event, media cycle. They have to pick something out that fits the bill, and tariff was the perfect thing. The reality is Trump campaigned on tariffs long before the election, so how could that really be the reason that the market was down from, what was this date? The 19th of February all the way through the 13th of March. And the 13th of March was what? A tinfoil hat event. Guess what? We have another tinfoil hat event coming up this week. Can the market bounce up to that tinfoil hat event and roll over? Absolutely. That's another awareness situation. Beware of tinfoil hat people. Look at the weekly chart. She comes down for 4 weeks in a row, hits the trend line, bounces right off of it, which happened to coincide with what? Something we were talking about every single night. They just came up short of a big-time breakup candle low. They got caught at the trend line, and she ricocheted back up. And we'll issue that a funny how that works. Remember the monthly chart? Anything wrong with this chart? She's coming back to run a test, or at least in the neighborhood of home base. Markets don't like to get too far from home base. What's home base? The 20-period moving average. Can she get to the 20-period moving average? Sure, if she bounces up and then rolls over at the new tinfoil hat event, absolutely that can happen. These are all awarenesses. And I'm not going to say that again, but that is a technical term, so you might want to write that down if you could figure it out. How about inside the numbers? Now keep in mind, we have Kabuki Theater this week in addition to the tinfoil hat event. What that means is we have an FOMC interest rate announcement and a Jerry's presser. Market can, doesn't always, but can get wild around those things. So the market tends to be quiet leading up to those things. We're air quotes waiting on the Fed. You know how that works. But what we'll do is let's take a look at where we were this morning. So we'll start with today's pivot, 561.80. Right of the vertical is today's activity. Here is a 5-minute SPY chart, and you could see the green line is the pivot. They never actually hit the pivot today, which is a little in the odd camp, but it does happen from time to time. Okay, fair enough. But wait, there's more. If she's above the pivot on candle closes, the door opens not only for Friday's highs, but another push toward a resistance zone found at 565.60 to 567.60. Okay, fair enough. That's a little wide. However, it's a resistance zone. That doesn't mean they have to get to the top of the zone. It's a resistance zone where we would expect what? And you look at the 925 quote, if they're there sooner than later, it represents resistance where we should see a reaction back in the other direction. All right, let's go see what happened. How about a reaction back in the other direction? There's your beginning of the resistance zone. They got almost halfway home. They traded sideways for a little while, and then what'd they do? They pulled back, giving us the trade. How you doing? So that was a morning trade from inside the numbers in the live room. Plenty of traders made some coin on that trade. Wasn't tremendous. We didn't make $100,000 a piece on that trade, but we got what's called our pound of flesh. What I urge you to do is pause the video. I wanted to highlight a couple of important things. Pause the video, read the notes, go back to the chart and double check the work. Stay tuned because here comes a, but wait, there's more. And by the way, you know about stocks on the move. We only had one today, didn't hit its number. We also have a list of markets. We cover a dozen markets for members of Inside the Numbers and the live room. Trade NASDAQ, trade small caps, semis, bonds, GDX, which is the gold miners, oil, gold, natural gas, silver, the dollar, Bitcoin. We've got them all. Here's the but wait, there's more. Now we're talking lazy swing trader, automagical algo system. Real quick, what is this? Traders get a watch list. They know what's coming, what the next stocks or exchange traded products are coming up to their numbers. So you're prepared. Once a trade happens or once a number is hit, a text and email alert goes out to members with the price that they already knew about, with the stop when you need it, if you need it, and the profit targets, plural, profit targets. So guess what? Today's profit target, a first profit target, base hit was right up here for KIE. This is the S&P Spider Insurance ETF. Entry was 57.90. Look at this run. This was what we call a base hit. There's more, right? We're waiting for more profit. But what this is now is called a risk-free, emotionless trade. Another swing trade in the pocket, profits in the pocket. Lazy swing trader, automagical algo system. The whole thing is automated. It's absolutely freaking fantastic. I worked on this for years. It is now in prime time. We nail lows all the time. Not every time, all the time. Or I should say, a lot of the time. That's fair. What's going on with the small cap stuff? Remember this line? Where'd that line come from? IWM. Camp IWM. Big time breakup candle low. We drew a line over last week. Maybe it was even there for 2 weeks. She came into it, ricocheted off. Today we have follow through on the day we were supposed to find the low. Anybody need me to say any more about this? Not really. Can she hit the 20-period moving average on this run? The answer is yes, she can. Do we know that she will? Not necessarily. However, we nailed the low. We've got follow through. 197 low. Today's high was officially 206. That's a pretty good run in what? 2 days. Transport, same routine. We can make a case for this thing, and the IWM for that matter, being below all the moving averages is dead cat bounce-ish, and that's okay. We'll call it what it is. We're the umpire calling balls and strikes. I'm okay with dead cat bounce-ish for now. Qs, same routine. All the charts look the same. Below all the moving averages, we'll call it dead cat bounce-ish. She's got to clear this big-time breakdown candle high at 483.97 in order to get something else going to the upside. So I would write that down, put it on a sticky note. Now, as you can see, she tried today but closed below it. That's a little bit of a tell, if you will. Remember, we're going to have a shakeout operation back to the downside. How much is a mystery, but they're going to shake out the weak hands. They're going to shake out the Johnny-come-latelys. The XLF, does this chart look any different than the rest? No, absolutely not. Dead cat bounce-ish, found the low with everything else. Everything gets a bounce. It's like an all the same market situation. Market sells off together, market bounces together. Certain things bounce more than others. That's just the nature of the beast. Now, we took a look at the semis last week and we said, hey, there's a tell going on here. Look when they bottomed before everybody else. We called that canary-ish. Now look where they are. So they were all the way down here at 210. Now we're all the way up at a high today of 231. And they bottomed a couple of days early, if you will. We called that canary-ish. The semis are a pretty good proxy for the tech space. And without the tech space, the whole market's not going anywhere. So we heeded that information. We talked about it last week, didn't we? Yes, we did. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.